Hey guys, hope you're having a good weekend so far. Now, we haven't really seen much movement in the market after the slump the other day. However, I do feel it is necessary to still cover the potential up and down side movements of this market. And whilst we are stagnant, I do believe it's a good indicator. Again, whenever this market does go very stable after a significant rise and then a pullback or vice versa, it does usually mean there is potential momentum to follow in a very large amount. So why not cover the upside and downside potentials for the main three, as it is the most important? And to be honest with you, BTC once again is now back in that throne position of 52% market dominance, as we can see over here. It has managed to remain exactly in that sweet spot, and if I refresh, it's still there as well, which is quite a rare occurrence considering it has been fluctuating quite rapidly the past few days alongside the rest of the market. Now, once again, the reason I have not really been too entwined in the XRP trades right now is simply due to the fact that we are 0.33% down, and there is a significant inverse correlation now occurring. So what it technically does mean is XRP does have a little bit of catching up to do in terms of price, and that usually is a good sign. Cardano as well has been significantly down the past few days, IOTA as well, and I believe it was even 2-3 days ago. Cardano was down around 5% when I last checked CoinMarketCap. So we are seeing a little bit of a slump between those ones in particular, which is usually a good sign that something could follow. However, with BTC and Ethereum seeing a bit more of an upside climb and the 52% dominance, it just gives me a bit more of an incline to stick with a BTC trade versus an XRP or Ether trade for the time being. Now, going over to XRP, if you actually go to the weekly time frame first, which is what I will be doing for the likes of Ether, XRP and BTC, we can see the moving average, which will be disclosed in the course. We can see the line we drew from the daily time frame. If you do remember that crucial region upon a breakout, we actually retested all the way down upon that pullback. And looking at the daily time frame perspective, you actually realize this is not too significant of a pullback. Yes, it has been several $100s. However, in the grand scheme of things and the overall market movement, I do believe this is simply a healthy pullback, which was covered in the Telegram with a nice Fibonacci retracement as well. As you can see, we spiked, if I just get that nice and precise. And by the way, if you haven't seen the last Wizard Wednesdays, I highly suggest you do so in order to understand the Fibonacci level placements, as you can even pull this back to here and it would still be a very valid movement with $5,600 as a very reliable target, and of course the 78.6 aligning with that daily support level as well, which was once resistance broken. And again, if you understand the theories, it's been retested one last time, and the current daily candle looking very good in terms of momentum right now. So as you can see from the weekly, it's technically pulled back from the weekly. We are going to close this candle today, so I am hoping to see at least a green candle closure for further confirmation. However, judging from where we are right now, we did spike that 5,500 region, which I did state could be a considerable threat for a pullback, which did occur. Hence why stop losses were moved slightly to the upside. Now, going over this theory of the quarter candle closure on a weekly perspective and looking at how we have been moving before, the only real caution I would be looking at is the downside of this daily level here, which has been tapped and pulled back higher. And again, we are rejecting that moving average as well. So there is another constriction now occurring between the zones of around 5,500 and 4,950. So going over to the daily, what you will notice, and again in the prior Wizard Wednesdays, I covered the theory of BTC always moving in increments of $100, $200, and $300, and this is no exception. As you can see, we were constricted on a 4-hour time frame within a $100 range, give or take, a few false breakouts, and the same is now occurring in the current price action momentum. Wicks and candles have been closing precisely at this level of $5,050, showing to me a very, very significant level that should not be broken just yet. After climbing higher and pulling back, we did manage to tap this level once more, pulling price back above and rejecting those moving averages as a very crucial level right now of support. As you can see, it was prior resistance, now we've broken above. We've just been gently rejecting this level and failing to break back below. Very bullish candle closure on this 4-hour with around 3 hours and 48 minutes left on this current 4-hour candle. So what I'm hoping for Dropping down to the 1 hour as well, you can see there is a significant push higher being attempted. We are now looking to hopefully break through this region, and once again, very simply, candle closures here. It's a crucial level of resistance, and all we need to do now is break 5,160 to see a very nice incline to this level here, which was covered. The trendline break, as you can see, has been just failed of retested, so that does not count as a retest for me, and it does mean another climb higher could occur. However, the real level that could be retested and should be retested is this trend line break here. We had 1, 2, 3 candle rejections, a break below, a failure to really reject this region, and looking at where prior price has climbed, I believe this could signify a very simple movement back up to these regions here of being retested and hopefully making a new higher high as well. Because as you can see, despite the pullback, we have formed a new higher high every single time. All we really need now is price, considering the prior real lower high was here as well, or higher low, so to speak. We have actually closed technically higher once again, fulfilling a continuation of the trend line for the time being. Going over to the daily as well, it's a bit easier to see that bullish momentum now kicking in after tapping into that region. The buy orders pushed us all the way back up, which is good to see. So we have a higher low here, a new higher low technically forming here. A breakout of this zone will confirm this further, and all we need to do now, start seeing that candle closure coming through, which could even happen around 5,600 on that retest, which would form a 1, 2, 3 extra higher high for an extra confirmation. I have now entered a long again on BTC with a stop loss very far below. We are talking around $4,800 behind this prior wick. Very messy movement, but if you are catching it from the lower high or the higher low, it's much easier to place a wider stop loss and know you are at a bit less of a risk of catching a major wipeout versus entering any positions around this region, for example, and place your stop losses just below, did carry that risk of a sharp pullback. And even I did get stung myself in that slight pullback. However, thanks to the huge trade explosion from around $4,900 up to $5,500, I was able to secure profits and have a pretty happy ending regardless. So the stop loss being hit wasn't too significant and nothing to dwell on at all. Now, looking at this further, just to obviously take the downside considerations into thought as well, and to factor this into our bias, we are constricted within this zone. Breaking out of this box will not threaten me too much. However, it could lead to another retest of around $4,950, give or take around this region as well, as the wicks have been proving to see over and over again. And as you can see before, we have seen breakouts of the box, which quickly lead to a rapid reversal back in and then a breakout higher. As we've seen before with a prior breakout as well, we've broken out, rejected the box at the bottom, and then tapped it again one last time. An amazing buy indicator as well, should we see a similar movement occur. We could easily spike back up to around 5,275, which I do believe could peak around 5,375. So I'll just mark these levels out for you very quickly. Let's go from here. And let's duplicate this very quickly as well and drag this up to here. So two ideal regions, so to speak, upon a breakout would be this zone here around 5275 and 5375, which could lead to a pullback to test the box. And should that sustain, I do believe the continuation will carry on to the $6,000 region. So let's just get rid of these for now. Actually, no, we'll keep them nice and clean, get rid of the trend line, keep this simplistic, and look at the Fibonacci targets before moving on to XRP and Ether. So taking this into consideration from the wick to the body, we already have a nice easy short-term target of the prior high with the extension of 0.618 aligning with around $5,600. Extend this further, and you can see this precisely lines up with $5,900 and 5,666. I do believe if price does surge, which I believe it should be doing, to this upside target, it will spike into, that $6,000 region and actually start breaching up and beyond. I do believe before we will be seeing this pullback, that trend line retest here will be coming into play at some point. It just has not happened, and this could really peak up to around $6,600. This should be occurring hopefully in a matter of weeks. So in terms of my long position, as long as we do not start climbing too solid down to this level, considering where my stop loss is, if we break below 4,930, give or take, just where this daily line was, which has been holding up pretty well, then I will just get out the trade and save myself the extra loss if it pulls lower. That's the only real downside risk on this for me right now, but considering the momentum and considering the higher highs and higher lows, I'm not too concerned, and the daily momentum is looking great. As for XRP, so again, because it has been down the past few days, the only thing that's keeping me fairly positive that it's just been a bit more significant of a loss is because of the actual current price in comparison to BTC and Ether. So technically the percentage could be a bit worse or could be a bit better in the form of a surge or drop. Because the percentages and numbers are much smaller in increments of movement, it can be a much more significant gain or loss. And using the daily and weekly time frame in combination, looking at the weekly first, after breaking that daily level, the trend line we retested twice, caused an absolute rocket to the upside. A great call, if I say so myself. I know you guys made good money on this trade as well. 2 rejections, bang, straight back up, breaching a new high. The same also applies for XRP. Looking at this level now, we're still rejecting this trend line. Again, a bit more concerned because the wicks are a bit more messy. There's not as much bullish momentum in comparison to BTC, but after those 2 spikes, we then saw 2 rapid attempts to breach higher. Also confirming though, on a slightly more threatening side, a break below this support of around 0.34, a quick retest, which does lead me to more concerns if around 32450 is broken. It could lead to further downside, back down to around 30.5 cents just at this region here. Because we are back lower as well, I do feel it's best to mark this level. Let's just drag that up a little bit, turn that purple for ease of use and visibility. As you can see, we could easily drop back below in a sharp movement to 30.5 cents if this level is broken. However, for now, should BTC start to follow, I do believe this could follow as well, because what has occurred once again, as long as we see another breach of around 34 cents, that will confirm a new higher low alongside the higher high forming here as well. We essentially are forming a new channel, and again, do excuse the sloppiness. I'm just showing you for the sake of seeing. You can see there is a new channel forming, so we could be cautious of that zone once again, potentially tapping lower and dragging its way down. However, this could be a nice movement, because if we do get rid of this zone and we keep this trend line out of the way, we just get rid of this for 1 second as well. If we just extend this over here, you can see we have fallen straight back to that daily intermediary. And again, I cannot stress the importance of the last Wizard Wednesdays and understanding the overall house structure. We have technically fallen down to another floor within the house, descending down the ladder, which can now hold as support to breach us back higher. And overall, I do believe with BTC and this weekly candle right now, we could see a very sharp weekly candle to the upside. So the only real downside threat is a break of this level here. Otherwise, we are still continuing on this upside climb, hopefully to around 44 cents. And as for Ether, the same applies. There is a slight concern from a weekly perspective. We have actually broken past this wick as well, which is very important to me, because this does now consider the factor of more upside to come as more promising, because 1, 2, 3 higher highs, 1, 2, 3. The only threat is the trend line. So just being cautious, looking at this box zone that we're in. I'm going to extend this out. This was the original box zone we marked. Potential spike, I do believe, can occur to around $180 where the prior wick was, but it could provide another significant pullback. This is a very similar theory to BTC. And because Ether is mimicking BTC's price action right now, I do believe this could lead to a pullback and a sharp rise to around $180. And then a potential retest either to the bottom of this line or to the just external resistance turn support of the box before climbing to that level of $200 and beyond. And I do believe it's fairly possible, very similar to this movement here on the 4-hour time frame. So all we need is a break above, for example, break, spike, retest, and we can start surging higher. So a very similar theory, and that's from a daily perspective as well. If we go down to the 4-hour right now, we've seen a nice curvature. We have found a fairly good bottom around $162 as well. It's been holding up very nicely, loads of spikes, but the candle bodies are just not closing below that region. So closing below $162, give or take, would provide a fairly sharp drop down to 156. However, there are no concerns for me unless the box is broken. If the box breaks, which is why I'm not really touching Ether right now as well, does mean we would be testing that trend line around $145, where again it would still confirm a rally higher, but it wouldn't be a wise opportunity to really be entering long around such regions. And again, if you're buying physical coins as well, I wouldn't advise doing so at this level, knowing you potentially have a sharp reversal to the downside as well. This would correlate nicely with this level as a retest and then a breakout higher. But overall, the market thesis, I do believe, is biased with this kind of movement here and only a sharp downside threat to a trend line. BTC, when you look at it realistically, the box is still failing to break. However, with so much momentum coming, I believe it's going to be a fairly surprise breakout, which will confirm the next rally to the 5,600 and 5,900 region. Something I also wanted to take into consideration for you all, if I go to the CryptoWZRD Twitter, going down to what I posted yesterday, here's something I've been doing and researching recently. Now, when Bitcoin broke $6,000, there was not much belief this would occur. The reason being was the news articles. I've gathered a collection. Bitcoin has hit the bottom, why it's unlikely to fall below $6,000. This happened in October 2018. Let's go to the next article. Financial Times, I believe this is, or FX Pro, sorry. Here we have the same theory. August the 14th, 2018. Bitcoin's bulletproof bottom. Well, I mean, if we go to the weekly time frame, I wouldn't call this bulletproof because it absolutely got shredded. There is no such thing as bulletproof. And it just kind of, I guess you could say, explains further why so many of these media platforms do not understand. Well, maybe they do understand, but the proof is they are not here to educate you and help you make money. They are here to confuse you and just jump on with the current trend. They just jump on the bandwagons, provide analysis when price goes up. Bullish, bullish, bullish. Bitcoin's mining costs will see it bottom out at $6,000. Traders argue. Well, let's go back again. It went to pretty much half the price of where it was stated, a 50% drop from where it fell. So realistically, did the miners suffer? Is the blockchain still functioning? Absolutely yes. I'll get onto this article in a second as well. Another one, Bitcoin has hit the bottom. Why is it unlikely to fall below 6,000? 6 months ago, we were talking the same timestamps. And if you read my tweet, I've gathered a collection of articles from major media outlets posted in 2018, all showing similarities. If there's one thing I've learned, it's to let the charts do the talking, not the media. I see more downside soon. Now, before we continue on that, Bitcoin will top $10,000 in 2019, says Fundstrat's Tom Lee. This stuff is irrelevant to me, and personally, I find it's all absolute bullshit. Looking at this, Bitcoin continues to hold strong above 5,000 mark as the new week starts, and going to another one. Daily Hodl, Bitcoin moguls. I'm sorry, but who is a Bitcoin mogul? Okay, so we have Cameron and the Winklevoss brothers. They founded this. Okay, that's great. They're saying that it will push back up to this level. That's good. I do agree to some extent as well, and they're saying it's pointing toward 5,900. So you have the articles that also have a more realistic approach. So $5,900 to $6,000 all the way up to $6,600, absolutely more than realistic. And the problem is these are being confused with the slightly more glamorous projections of 20,000, 10,000, 50,000, 100,000. And the problem is you have these big major media outlets who are projecting all of these so-called experts and investors saying 10,000, 20,000, and they are simply overemphasizing what is only going to be a potential minuscule run-up. And this is history repeating itself once again. It's always when the news, what is it, buy the rumor, sell the news? That's pretty much how I believe. And what could be occurring now with all these news articles coming out, I do believe it will lead to a short-term pump. It always works in the media's favor for a very short-term period. For example, August. When was the article posted? 18th of October, August. Let's have a look at these dates back at BTC. 18th of October and August. Okay, so here, 6,000 held. It rocketed. Great. It went up around $1,000. And then let's go to October. It done the same again. Bang. It rocketed around $1,000, even more, almost $2,000. Price rocketed from that $6,000 floor. So it always works in line with the media's projections for the short term. So it's great to catch the pump in the direction the media cover. However, it never sustains in the long term, because that is not the goal. Because if it really was going to be a straight bull run and an easy journey, then we would all just listen to Bloomberg all day and be mega wealthy with no effort whatsoever. And I've just started to realize these patterns becoming more evident, and the more new people that join the market, I just feel it's right I actually provide a platform where I'm giving a bit of realism to what's actually happening in the market. So using the media's bias as a good example, yes, it could actually help pump us up to that $6,000 region and beyond. But overall, in the short term, again, the lower lows and lower high theory, lower lows have been formed, potential lower high around this region, straight back down we go. Using the false wick for a Fibonacci level as well, $6,000, $6,800. Push this even lower. Let's drop that to around there. Push this. Right, what's happened there? Oh, there we go. Push that to there. We've actually already hit the 61.8% Fibonacci, hence the pullback, as you can see. But look at where the 5,900 target lines up. It lines up with the 78.6 Fib as well. So it's one of those things where it's just good to pay attention to the media. And then if we look at the downside projections, would you look at that 2,400 as stated in the prior video? And then we have $1,200 in line with the initial target and precise high of this level here. I do genuinely believe this will be occurring over the next few months and weeks. In particular, I do believe this is going to unfold a sharp spike up to around $6,000. If it falls just short and we start seeing a pullback, I would just get out. I will not be greedy. I will have gratitude for this movement. But looking at the overall longer term Fibonacci plays, remember this is the weekly time frame, our next Fibonacci alignment lines us up with the overall Fibonacci retracement, which then leads down to another significant movement. Let's duplicate this move from there to there. Drag that down from there to there maybe. Takes us just shy of that first Fibonacci target. And again, dropping that down from this Fibonacci target, it's not too bad either. But overall, I do see this really unfolding over the next few months, and I'm still more certain than ever there is more downside to follow after a significant final pump, taking us back to the downside. So guys, again, I'll try and touch on this even further in the podcast coming later this evening. But overall, I just wanted to provide some rationale, a slight bias on both sides, should we see a breakout in either direction. However, I am favouring the upside, and the market's quite boring, but I still want to provide content regardless, because when the market slows down, it doesn't mean I should either, and it doesn't mean the education should stop. So hopefully this has helped you see a slightly different perspective whilst the market stabilizes in this $100 range. And again, I look forward to hearing from you guys in the podcast, where we'll be covering more on the theory of this, and of course another motivational or philosophical topic as well. So I hope you guys are having a good day. See you in the podcast in just a matter of hours.